inside bar pattern strategy when the market is trending. I've already showed you how the market trends. So for example, down here, I think this could be a nice example again. For example, here the market was formed 3 white soldiers. Yes, fine. So it means that if I'm to locate bullish inside bar patterns, I can start. So here is my first one. Remember I said the first candlestick, which is the dominant candlestick, a mother bar, which is let me use arrows, which is this candlestick right here, is the one that we use to identify to place our breakout level. So this was my first bullish inside bar pattern. So when the market is going up, we only identify bullish inside bar patterns. So for me to confirm that this is an bullish inside bar patterns, is because the next candlestick, which is the opposite, which is this one, the body of this candlestick is within the low, and is also within the high of this mother bar candlestick. So let me locate the low for you. This is the low of this candlestick of the mother bar. This is the high of that candlestick. So where's the body? I don't care about the tail. You can see the tail exceeded, but I don't care about the tail. I only care about the body, which is this one. The body is inside. It means that that's an inside bar pattern. So I'll delete the low, because I said when a bullish inside bar pattern, I only focus on the higher price. That's where I locate my breakout level. So if you want, remember, trading, being profitable doesn't mean you must have 100 analysts, you must have daily charts. No. Without even doing what I did here, you can see that you have an inside bar pattern, meaning that if you were to use pending orders, you just locate an inside bar, put your buying pending order here at 1831, because it's where the higher is of the mother bar, and then wait for the market to trigger, meaning that this reversal candlestick here, it was going to come, open, yes, go to profits, and then losses again, but the next one broke out, and then that's how you make profit. But if you're avoiding false breakout, what you have to do is that wait for the candlestick. But I don't rely on that. I don't believe in waiting for the candlestick to break. So it means that this was going to be your entry. Your entry was going to be exactly at 1831, because that's where it broke the high of the mother bar. So this here gives us an entry, first entry, and then we move on, and then we see if the next candlestick fits to be an inside bar. Yes, it does fit to be an inside bar pattern, because this is the low, this is the high of that mother bar, this is the body. So it means that I repeat the same thing. I locate my my breakout at the high of the mother bar. I locate my breakout level at the high of the mother bar, and then put a pending order at 1834. When the price triggers here, is going to go up. So don't panic if the price breaks and then comes back again. No. And the other thing is that I said inside bar pattern can also be an example of a pullback. Remember, if the market is going to a certain direction, if it opens a different candlestick, it means that it's a pullback. Goes with bullish candlestick, open different one, pullback, and then you can see it. That's the reason we say inside bar pattern can also present pullbacks, and also inside bar also represent continuation, because already we have two entries. Our entry was going to be triggered at 1834. That was going to be our next entry, right? Fine, we'll move forward. And again, I said inside bar pattern can also represent the beginning of consolidation phase. Remember, consolidation phase is when market creates small candlestick in one place. So if we were to use the first method, which is the order block method, this is what we're gonna do. We're going to draw our block here, extend it to the right, wait for it to break out the resistance level, and then have our buy at this place, but you can see that the location of our entries will be different based on which method you chose. But we're not really doing order blocks at this another one. This is another inside bar. This is another inside bar. Locate your breakout level at the high price of the mother bar, meaning that if you miss out on this entry, you have a third entry right there. So you have another entry right there. Like I said, inside bar represent continuation. This is another one, bullish inside bar. Do the same thing. Put your pending order at the highest high. When the market touches this line, when the market touches this price 1841, it triggers. So that's how you have snipper entries. So if we're not using inside bar pattern, it was going to be the same thing, because what you were gonna do is that you will see that the market is becoming choppy, and then you draw your order block here, because it's now creating small candlesticks in one place, meaning that you just locate your order block right there, and then extend it to the right, and then wait for the market to break it, and then you execute your trade based on the location of your entry. So this is it. This was going to be like your fourth entry if you had missed out entries down there. So this here, your fourth entry was going to be triggered at 1841. But if I was to locate the last inside bar, I could locate this right here, and then put my breakout level at the high price of the mother bar, which is the leading candlestick, which is right here. So it simply means that my pending order will be right here at 1843, meaning that when the price gets to this point, this is another entry. When the price gets to let me do this quickly. When the price gets to 1843, it was going to trigger a buy, because that's a breakout. Then you just hold, and you can tell that if I was to extend this breakout line, it even came and test it, and then test it with a pullback, and then continue going down. So you choose if you want to extend your breakout levels or not, so that you check if the market will come back and test or not. But it usually come back and test on the latest inside bar, maybe the fourth or the fifth one within one trend. So that was like the fourth or fifth entry. Actually, that was the fifth entry. But check what is still happening. Still snippers, because they never came back and hit your stop losses. So goes up, come back, goes up, comes back, and then it drops. It drops heavily now. So when the market starts becoming choppy, that's when you know that you might draw an order block. So you can combine this method. You can combine method 1 and 2. I haven't shown you method 3, but I'll show you method 3. I can show you method 3 immediately. So method 3 is easy, because method 3 is triangles. So sometimes towards the end of the trend, market forms triangles. So what happened now is that triangles are not really easy to identify. You have to have sharp eyes to identify triangles. So this could be something I'm seeing. They usually comes after a strong trend, at the end of the trend. So this is something I can come up with. Meaning that within this triangle, I'm waiting to see where the market is gonna break, because obviously the market has came way down to this point. So it means that I wait for proper breakouts, and then it is seen that the market broke on the lower triangle. So this part on the strategy I've explained that is the support level, the upper part is the resistance level. So I'll combine these triangles with these inside bar patterns. So it broke on the lower side, so it simply means that my sell orders can I can start looking out for more selling opportunities. So we just go straight up to identifying bearish inside bar, meaning that now my bigger candlestick, the leading candlestick should be bearish, and then the following candlestick, the opposing candlestick, should be bullish, meaning that the mother bar now is bearish. So since it broke my triangle at the lower price, at the support here, we wait for a full body candlestick to close outside the triangle. So if I want re-entries, I'll be identifying inside bars now. So let me identify bearish inside bars. This will be the first one. Remember I said to identify an inside bar, the baby bar should be within the low of the mother bar and the high of the mother bar. So the body is still inside there, so it means that does an inside bar pattern. So since we're dealing with bearish inside bar pattern, I'm only gonna be focusing on the low of the mother bar. So meaning that I will put my pending order at this price, which is the low, which is 1847. When the price touches that line, it was going to trigger. So this could be my first entry. Right here, I could have my first sell entry. Move forward, it gave me another confirmation of inside bar, which is this one. I do the same thing. I locate my low at this price, and then it means that when I locate my pending order at this price, when price touches 1844, it was going to trigger and break it and then move down. So I also explained that inside bar can be the beginning of consolidation phase. Consolidation phase is when the market house create small candlestick in one place. If I was to use the first method, this is what I could have, and then the upper part is my resistance level, lower part is my support level, meaning that right now I'll be waiting for my resistance level to be broken or this support level to be broken, and that support happened to be on the lower price if I was to use inside bar pattern and then execute my trade. So this is what I would do. So when it comes to order blocks, don't use pending orders, just wait for full body candlestick to close outside the block. But when we're using inside bar patterns, you are allowed to use pending orders because it's even simpler. So meaning that my second entry of this trend will be right here at 1844, and then we move forward, and then my another inside bar is right here. Another inside bar is right here. So the reason I'm saying is right here is because the body of the next candlestick, opposing candlestick, is still within this price, the low price and the higher price. So that's an inside bar. So meaning that this is what I would do: locate my breakout line over there and then put a pending order at 1841, meaning that at 1841 my trade triggers, and then I've got my third entry. So if I feel like I'm satisfied now, the only thing I can do is to hold what I have and stop looking out for more inside bar patterns, and then move down. I feel like I can still locate the last one, do the same thing. Remember, inside bar pattern represent continuation, so this is a continuation of the sell trend. So you can tell here that that's an inside bar pattern of the bearish. Locate my breakout line over there, and meaning that what I can do, I could have a breakout. I could have a pending order at 1836. When the price touches this price 1836, when the market touches 1836, it triggers and go down. So obviously, because it will retrace back, it won't touch immediately. So obviously, I will have to wait up until it triggers, and then make sure you put your stop loss tight based on how much you have and how much you have risk. Like I said, inside bar pattern can also represent the beginning of consolidation phase. So if I was to do this, I could have an order block here. So remember, I said when you draw order block, always extend it to the right, because you never know what might happen. So if I was to use an order block, it broke on the lower side with this candlestick here, came back and just exit again, came back and just exit again, went back. I said if it broke, if it goes back to my order block and then go inside and broke on the second part, it means that the direction has changed. So you can tell that the direction has changed because it also came back and test and then exit now. But we're not dealing with inside bar. We're not dealing with order block. We're dealing with inside bar, meaning that my last inside bar, my last entry, if I was to keep on adding my fourth entry, could be triggered at 1836 and then go down. So what I can advise you is that this strategy is mainly for scalping in and out. People who make money for a living, like people who trade for a living, you want to fund your lifestyle and everything, this is the best strategy because you make money, you take your money, withdraw, you don't hold position for so long because this is for intradays. But if you don't want to be an intraday, you are a position trader or swing trader, I prefer you can use H1 or H4. That's why you will wait for so long. So like I said, still the same thing. If we were to use, because the market has changed direction, we could have also located 3 bulls now because the market changed the direction. 3 bulls right here, which is the 3 white soldiers. Even if they were like red, we still call them 3 white soldiers. And then right now it means that I'll be locating bullish inside bar patterns. So I could have the first one over here. So since now we're going to a bullish inside bar, bullish move, and then my breakout line will be here. My breakout line will be here on the high of the mother bar, meaning that when the price touches this, when the market touches this 1841 price, it was going to trigger us because that's where my pending order will be. So that would be my first entry. This could be my first buy entry. So see, if you are a good scalper in and out, this is for you. Another one right here, this is a bullish inside bar. Another, so this help you trade what you think, what you see, not what you think. So another pending order could be located at 1846. So this could be another buy entry. So you don't hold for too long. So right now you can tell that the market start being choppy right now. The market started being choppy. So from here, like I said, we can avoid choppy markets. You can tell that from here, market started being choppy. And I've also mentioned on the strategy that strategy doesn't work in isolation, meaning that it doesn't work alone. It's not like we'll be trading inside bar patterns all alone. If you can still identify mini trends, zones, minor zones, major zones, resistance and support level, do so. So here you can see that it was creating a lower channel, a downward channel. So the moment you re-practice the strategy, that's where you see that it is easier. So you can see that it broke on the upper side of the channel, and then there's a continuation there. There is a continuation right there. So you still continue looking out for bullish inside bar patterns. See, because this has created a bullish channel again. A bullish channel. So I hardly use trend lines because they help me blow the account, because I want the market to respect my trend lines. So you can tell here. So like I said if you want to use the triangle strategy, it's not really easy to identify triangles, but I've stated that triangles can easily be identified towards the end of the trend. So that was another one. So you repeat the same thing. You can see that market is repeating itself. You can tell market is just repeating itself. Market is repeating itself here. Market is a cycle, it always repeats itself. So we'll continue checking bullish inside bar patterns. So find the market is going up. So here, since it broke the resistance level, it broke here. it broke here, like we wait for it to break. Like I said, this doesn't work in isolation, so it broke the resistance level right there. So I'm still gonna be continuing checking my bullish inside bar, meaning that my breakout line could be located here. I could locate my breakout line right here. So, and then I can create a pending order exactly at 1848, meaning that when the market finish with this pullback, when it comes back and touch 1841, the trade is going to be triggered here at this level here when it touches 1848. So fine, still continue. We have an entry right here. That's why I guarantee you that the strategy works best unless we can have emergency news like what just happened to Nasdaq, and then it messes our entries. So if you want, you can check that it works best, because you can see it broke that line, come back and test, but continue going up. But I hardly extend this breakout line because I just know that I had a pending order right here up until I spot another one. So if it was to even mix with method one, since the market is consolidating, I could even do the same thing, do like this, extend it to the right, do like this, wait for the market to break my resistance level or support level, and then buy whichever direction the market will break. I buy or sell. But we're not dealing with order blocks right here. We're only dealing with inside bar, and can tell still the same inside bar pattern breakout here. Can tell here still the same one that I located. See, still the same one, I'm not coming across any inside bar pattern that is favoring my bullish move. It means that I'm still holding. So that's when the market gave us that trend line. So besides that trend line, I could also locate another line right here. Besides that triangle, I could also locate. So you can tell that the market always repeats itself over and over and over and over again. If I was to delete the triangle, this is what was going to happen. You can tell how the market is moving. But we're not trading trend lines. So this will only this will only fit to be a triangle, because I mentioned something to do with triangles as the third method. So it's not really easy to identify triangle, but the more you spend time on the market, that's how you can easily identify different market patterns. So on the triangle, the upper part is the resistance level, the lower part is the support level. Wait for it to break, and then it break on the lower side. It means that you wait for a breakout candlestick to completely form, execute your entries on the second one. So meaning that here I've got my entry right here. This is my first entry. So since that's a sell, obviously I'll be looking at for sell bearish inside bars. Located the first one right there. Place my lower breakout at the low of the mother bar. When the price gets to this point, 1848, it was going to trigger another buy. Another sell, and then we go down like that. And then if I missed out on that one, you can also confirm with me. This was another bearish inside bar. This is another bearish inside bar. So this thing is easy because it's only identifying two things: bearish inside bars on bearish markets and bullish inside bar on bullish markets. So the last one would be this one. So it means that when the price came to this 1842, it was going to trigger. So meaning that this was going to be our last entry. So I if I have 3 entries in one channel or in one trend, I stop locating the next inside bar, because we don't know if we're coming towards the end of the trend or not. But you can tell that we're coming towards the end of the trend because already the market is creating a double bottom. So here you can tell, we can check here, if, like, remember I said you can choose, you cannot only use inside bar, you can also use other technical tools that you're seeing here. So here I saw an order block, an opportunity of an order block. What I could do is to like extend it to the right like this, so that I can be able to see full breakouts. So what I'll do is that I'll wait for it to completely create a full breakout candlestick outside the order block, either at resistance level or either at support level, and see what entry it could give me. So again, what I can tell you is that here I can still see a double bottom forming. So there are different possibilities here. There's a double bottom that is forming. If I'm seeing well, there's a double bottom. So you don't have to stress yourself with a lot of indicators. Remember, indicators are not that accurate as you are. So this can also happen. So we wait. So it means that the only thing that we're waiting out now is for the market to break out this resistance level, or is for the market to break this support level, and then we see. Like I said, inside consolidation markets, we don't place any trades. I think we have come to the end of this session. I've explained everything, so don't stress yourself with triangles. Triangles don't really pop up everywhere. Like I said, if you can tell that the market has come towards the end of the, if you can identify that the market has dropped enough, that's where you can try to fit in a triangle. Or if you can identify that the market has rallied enough, that's why you can identify a triangle. For example, here you can tell that the market has dropped enough. Let's see if we can feed a triangle. Yes, we can feed a triangle. That's a triangle right there. That's a triangle right there. You can tell that, oh, okay, that's a triangle right there. But if you don't want to be involved in this triangle thing, stick to other blocks. So triangle is another form of drawing your order blocks. You see, simple. If the market has fall enough or has rallied or go up enough, that's where you can locate triangles. So they're not really easy to identify. But the more you spend time on the market, that's how you easily identify triangles. Like this, I did identify a triangle over here. That's a triangle over there. So also triangles, they are continuation patterns. So triangles inside bars, those are continuation patterns. And then other blocks can be used as reversal patterns, and they can also be used as as a reversal. Actually, also triangles, depending on where the triangle has popped out, because also triangle has support and resistance. So everything that has the support and resistance can be a continuation, used as a continuation, or can also be used as a reversal. So it depends on which location it has been identified. See? So here it was seen. So like I said, after strong movement, that's where you identify triangles. After strong movement, that's where you locate triangles.